เค สวัสดีครับกลับมาที่ ICT Core Content แบบแปลไทยนะ อันนี้ผมไม่ได้สรุปนะ มันยังไม่เชิงสรุปนะครับผมแปลไทยก็คือเปิดจากต้นฉบับเลยนะ คลิปมันก็จะยาวหน่อยนะครับก็ขึ้นอยู่กับคลิปของลุงว่ายาวแค่ไหนใช่ไหม คลิปนี้ความยาวอยู่ที่21นาที แต่ว่าคลิปเนี้ยจริงๆมันก็อาจจะไม่ได้เกี่ยวตรงกับ ICT ขนาดนั้น แต่ว่าเป็นเรื่องของ Divergence Phantom เดี๋ยวเราไปดูว่าลุงพูดยังไงนะครับ
Welcome back, folks. This is teaching 7 of 8 of the December 2016 content for the ICT mentorship. This teaching is going to be dealing specifically with momentum, divergence, phantoms, market maker trap. And I don't teach a lot about indicators because phantoms, market maker trap. And I don't teach a lot about indicators because they're mathematically derived and they measure the past. As a new trader, I used them a lot and had a lot of false hope placed on them. I like looking at them at certain points in price action because I can see where I used to think price would go relative to a indicator, and I can tell you now it's a completely different paradigm shift. That when we see price action indicating that it wants to go higher, not looking at the indicator, many times the indicator is going to tell you it's probably stopping now, or it's petering out, it's making its reversal, or it's running out of momentum, if you will. The idea is the indicator is going to drive price. As a retail trader, that's what we think, and it's not the case. The indicators don't have any reflection whatsoever about what the market's going to do next. Price has no awareness of our indicators, but we can reverse engineer that thought process and use that market efficiency paradigm I've been teaching since the beginning of this mentorship, where we look at how liquidity can be either engineered or neutralized. And whether they're willing or unwilling participants, the market makers can draw traders into the marketplace, or take them out of the marketplace. And by unseating them, they can assume their position, or put them in on the wrong side by engineering liquidity runs and then take the market the opposite direction. In this case, what we're looking at here, this is the US CAD, this is a 1 hour chart. And I have the chart trained in on the November 10th and 11th. And we're looking at how the market made a slightly higher high here than here, while momentum was already posting a potential bearish divergence. Now, when we talk about divergence, there's two types of divergence. There's type 1 divergence, which is your classic higher high, but not seeing a higher high in the momentum. Okay, so that's type 1 bearish divergence. A bullish divergence would be the opposite, where we see a lower low in price, but a failure to go lower in the stochastic or whatever momentum indicator you use. That would be a type 1 bullish divergence. In trend trading or momentum trading, there's called a type 2 trend following, and it's commonly referred to as hidden divergence. And it's been never really associated to who discovered it, but Nick Van Nice, he was the guy that released it to the trading community at large. George Lane gets a lot of credit, and falsely, I might add. He was not the creator of stochastic. He's not the the inventor, if you will, of divergence. But nonetheless, it's one of those pet peeves of mine. I hate when I talk about this. I always got to bring it up because it's just like a stick in my craw. I can't stand it, so I have to keep reminding the folks that are in trading. If they talk about divergence, they probably should be thanking a guy that they'll probably never even meet, but his name is Nick Van Nice. And it's a trend following divergence, where if you have a higher low, but the stochastic cycles down, makes a lower low, that's trend following in nature, and it usually gives us a really good momentum entry for bullish markets. Now, I'm not teaching entries with stochastics or any momentum indicator here, but I am going to teach you how to use a means of sentiment, or how retail-minded traders are going to think about price. I like these ideas because when we read the books, when we get into trading, we get all these indicator-based books and textbooks and courses and CDs and mentors and everybody else and their disciplines. Okay, and believe me, I went through all this myself. So it's not like I completely, walk on water. I never had those issues before in the past. I came up through all that stuff. But the indicators teach us and they try to promote this idea that indicator-based trading is the way to go. So therefore, there shouldn't be no thought process involved at all about studying price. Just study if the indicator is overbought, if it's oversold, if it's diverging bearishly or bullishly, and that's it. So you have four conditions there. Are we overbought or are we oversold? And if we are overbought, is it diverging bearishly? Or if we're oversold, are we diverging bullishly? And if it were that easy, then everybody would be making money. The problem is there's some things you have to look at to determine if the market is in fact bullish or if it's bearish. And here's one for you. There's a fifth condition. Is there really a time to be trading? Because there's some time there isn't. Markets will stay in consolidation, and you just don't want to be doing much of anything. So if we're looking at an example here, okay, where price makes a higher high like this, okay, forgetting what's over here, like a retail trader like I did, I just looked at, okay, well, now we're making a higher high here. So naturally, I'm just looking at any time when the indicator was failing to make a higher high. That's how I started in the business, folks. In 1992, I'm looking at charts, and this is what I'm looking at. A bear.
โอเคก็เป็นเรื่อง Divergence ที่เราทุกคนน่าจะรู้กันใช่ไหมสมมุติว่าอ่าเดี๋ยวนะอย่างอันนี้ใช่ไหมครับ High ทำ Higher High ใช่ปะอันนี้ High ฝั่งเดียวกันแต่ฝั่งนี้ยังไม่ทำ Higher High มันเป็น Bearish Divergence ใช่ไหมอันนี้สูงกว่าอันนี้ต่ำกว่าซึ่งลุงก็บอกว่าก็จริงๆก็ไม่ได้มีอะไรลุงก็บอกว่าถ้าเกิดสมมุติอินดิเคเตอร์มันใช้ได้ดีก็รวยไปหมดแล้วดิใช่ป่ะฉะนั้นลุงจะให้เรามองผ่านมุมมองของ liquidity นะครับใน market inefficiency paradigm shift นะครับนะคราวนี้ผมไม่มีคอมเมนต์เกี่ยวกับเรื่องนี้นะทุกคนอย่าแบบมาฟังแล้วแบบว่าเกลียดผมนะอันนี้เป็นลุงเขาสอนนะคือลุงจะเป็นคนที่บอกว่าพวกแบบ retail trader ทั่วไปอะไรเงี้ยเขาจะใช้ RSI overbought oversold อะไรเงี้ยใช่ไหมครับบวกกับ price action บวกกับเส้น EMA RSI อะไรพวกเนี้ยซึ่งลุงบอกว่ามันไม่ใช่คำตอบมันแบบมันเหมือนเป็นเครื่องมือแบบลวงอ่ะ
Bearish divergence. Okay, so I would be looking to go short there in 1992 and 1993. But understanding what I know now, there's liquidity above this high. They're not going to keep price this close, okay, and not run that high. So there's buy stops above there. So if I see bearish divergence in here and it's qualified with this move here, we have a crossover. It starts to drop down, okay? But look what we have. We have a down candle here. We have equal lows in here. So the market drops down, clears out the equal lows, dips into this bullish order block. This also, in here, we have a range from the high down to the open on this candle. This range in price trades down into it, the midway point of it. Okay, just like a mean threshold. Okay, this portion, price comes down, delivers price below these lows in here. Momentum indicator folks are going to say, okay, well, this is a solid bearish divergence, so we're going to be expecting lower prices. Price action based traders are saying this is actually a buy, and there's an equal high up in here, and we have liquidity above this high here. We're too close to these levels up here not to run them. Market consolidates a little bit in here, and then boom, it rallies up, makes one more tap against this high here. Is price going to reject here? No. Look what's happened. We have a low, which is directly related to this cycle through on stochastic, and then we have this higher low with a lower low on stochastic. This is that hidden divergence or trend following divergence. Okay, this actually is a very powerful scenario if you know what you're looking for in price and you see this qualified in a momentum indicator. Not that you're basing your trade on the indicator, but I like seeing this because what this is doing is arm wrestling with the guys that are looking at this bearish divergence, looking to capture a high. Because think about what it is. when you're looking at indicators, the mythology is you can pick tops and bottoms with indicators, And while we can go back and look at the charts and see many examples how that may have been profitable, but there's many times where it isn't profitable either. So if we're going to be looking for price action to give us clues as to where price is going to be reaching for, you can't get that information by looking at an indicator, because all that's doing is looking at the past, and it's compressing all that data mathematically and spitting out an output. That output has absolutely zero bearing on where the actual orders are in the marketplace. UBS, Credit Suisse, Citi, they're not in the business of looking at what stochastics is telling them. That's not what they're doing. But they are interested in where buy stops and sell stops are. Okay, and they're attacking the liquidity on the fund level. So when I talk about making a run on stops, it's not that they're aiming for retail stops, because you're not even
อืมทำไมช่วงนี้อินเทอร์เน็ตบ้านผมถึง
in
ห
the
ลุด
same arena with them. But if they can push price to an area
ๆโอเค
above an old high or below an old low, they know that there's going to be a pool of liquidity in the base of fund trading. So let's recall that market efficiency paradigm. Retail views price and they see what they want to see in the context of an indicator: buy or sell, overbought or oversold. Market makers look at the participants' thought processes about price, and they manipulate their decisions based on what they should be seeing in price. The indicator's way of
เดี๋ยว
engineering
แป๊บหนึ่งนะขอจดตรงนี้ก่อนตะกี้ที่ได้ยินมันดูดีอยู่ในว่าอ่า retail views price and they'll see what they want to see ใช่ไหม in the other hand my money view bullet สักอย่างเดี๋ยวดูก่อน
and they see what they want to see in the context of an indicator: buy or sell, overbought or oversold. Market makers look at the participants' thought processes about price, and they manipulate their decisions based on what they should be seeing in price. The indicator's way of engineering a thought process behind a trader, and it's almost like remote control in many instances. And funds, they trade with a trend following nature.
โอเค market maker ใช่ไหม the thought process ใช่ป่ะอืม against แป๊บหนึ่งนะตรงนี้ผมอาจจะเขียนไม่ค่อยถูกเดี๋ยวผมไปตีความคือจริงๆก็คือว่าเอ่อโดยสรุปก็คือว่าคือเวลาเราเป็นรีเทลอะเราจะคือมันจะต้องมี2ฝั่งถูกไหมมันจะมีรีเทลที่มันจะมีฝั่งใดฝั่งหนึ่งถูกอยู่แล้วในตลาดใช่ป่ะถ้าคุณเซลผมบายถ้าสมมุติว่าคุณออกออร์เดอร์เซลผมออกออร์เดอร์บายมันต้องมีใครคนใดคนหนึ่งอะสต็อปลอสถูกไหมก็คือมันต้องมีคนหนึ่งชนะคราวนี้ในของรีเทลเนี่ยเวลาที่เขาเข้าออร์เดอร์เนี่ยเขาก็จะเข้าจากการที่คอนเฟิร์มอินดิเคเตอร์แล้วก็อยากจะเห็นกราฟไปแบบนี้ใช่ไหม what they want to see ใช่ป่ะ context ของอินดิเคเตอร์อย่างเช่น RSI overbought oversold divergence หรือว่า pattern ต่างๆใช่ป่ะแต่ถ้าเกิดเป็นในส่วนของ market maker เนี่ยมันต้องทำให้ตรงข้ามอยู่แล้วถ้าเกิดในมุมของ ICT เนี่ยฉะนั้นเนี่ยลุงก็เลยบอกว่าเอ้ยจริงพวกอินดิเคเตอร์บางทีมันช้ากว่าหมายถึงว่ากราฟเกิดแท่งเนี้ยกราฟเกิดสมมติแท่งเขียวนี้ใช่ป่ะอันเนี้ยมันเพิ่งหักแค่นี้เองหักมาแค่นี้เองกว่าที่จะหักโผล่ขึ้นมาอย่างเงี้ยมันไปแท่งนี้แล้วอะไรอย่างนี้เราอาจจะอยู่แบบแถวๆแท่งนี้แล้วถูกไหมแต่ว่าถ้าเกิดเป็น ICT เนี่ย ถ้าเรารู้ว่าตรงเนี้ยมันเป็น liquidity บางอย่างใช่ป่ะอย่างเช่น key levelหรือ reference point อย่างเงี้ยเราสามารถที่จะมีออเดอร์ตรงนี้ได้ใช่ป่ะอันนี้คือเอ่อความคมต้องบอกว่าอันนี้คือความคมของ ICT ที่ผมมาเจอมานะมันไม่ใช่ว่า ICT มันไม่แพ้นะมันไม่ใช่มันแพ้แหละแต่มันเป็นโลจิกอีกแบบหนึ่งในการเทรดแค่นั้นเองโอเคอ่ะไปต่อดีกว่าเพราะว่าคลิปนี้ไม่ได้ยาวมากแล้วก็ผมคิดว่าก็คงไม่ได้แบบอะไรมากนะ
They're long-term momentum trend followers. But those long-term trend following systems that they use can be targeted, and usually it's in consolidations, or sometimes if it's at a high where they're making a top in the marketplace, those funds that are aggressive and they try to sell short, they make one more pass up there to knock out those individuals. The smarter fund traders will go back in again, but you know what it's like sometimes when you get knocked out of a trade, the wind is taken out of your sails. You don't want to do it again. You're afraid. But when we look at divergence in here, okay, there's two camps. Those that see that higher high here and the subsequent movement lower, which would confirm in any retail trader's mind that they did capture a top, because that's what they're thinking. Okay, bearish divergence, they're looking for tops. Bullish divergence, they're looking for bottoms. They're looking for bottoms. You ask any trader that sees that, they're not looking at qualified entries and qualified exits and specific targets. What they're looking for is get me in at the low and I'll figure out where I'm going to get out later on. And believe me, I've done that same thing. When we look at price now, we see that, yes, they're going to see that as a bearish divergence. They're going to want to sell short. And we expect that same measure of retracement lower as well. But we want to see it come back down and hit this order block and wipe out this stops here. Why would they want to come down below these lows in here? To gather up all the sell stops. Why? Because they're willing sellers down there. Why would they want to go down there? Because they want to pick up those orders that liquidity is offering so they can buy them. So price quickly reprices, and now we would make a run above this high here. Why? Because this is the real divergence, okay, or the new cycle low on the stochastic. Notice it's not oversold. It's not needed to be oversold. It's not needed to be oversold. What we're doing is we're watching the momentum shift back down just to get the sell stops. Then they make a run for where the market really wants to be reaching for, the orders, not what this little indicator divergence is indicating here. So we're seeing retail view this as a higher high in price with a lower high in stochastics, which is what every textbook shows. That's a type 1 bearish divergence or a sell signal. Okay, you might have saw 30 pips or so in your favor, but you're not going to hold for just that. You're going to hold forever. You're going to look to see it go lower and lower and lower. And you know what it's like to be, a new trader and looking at all this stuff. It's the same stuff you did just as well as I did. But if we wait for the stochastic to cycle down below this low here, we can anticipate that same thing occurring when it runs out some sell stops and it closes in a range for a bullish order block. Then we can expect price to snap back higher and take out this whole assumption that it's a bearish divergence in the marketplace. Again, price has no awareness of the divergence, but markets have an uncanny ability to be aware of the thought processes that are in all the traders because of their orders, because of their trading, because of their leverage, because of what they're doing in the marketplace, the excitement around specific levels. So when we see this, we anticipate price moving higher, not on the basis of bullish divergence that you would see classically with a lower low and a higher low in the momentum indicator. What we're actually seeing is a higher low relative to this low and here, this being higher low, but the momentum actually is cycled lower. Again, that's type 2 hidden divergence, bullish. It's trend following in nature, and we can expect to see price drop above this high here. And price does in fact that. So you can see price gave a nice opportunity here, and those individuals that looked for this bearish divergence were left holding the bag. Okay, folks, we're looking at the dollar.
โอเคก็อืมก็อย่างนั้นแหละก็จากนั้นก็เป็นตัวอย่างเนาะเดี๋ยวนะอ้าวที่ผมเซฟไปไหนล่ะผมอุตส่าห์เซฟไว้เอ๊ะเอ๊ะอึบอือฮึอ๋อเจอแล้ว เอามาใส่ซะหน่อยมันชัดไหมเนี่ยมันไม่ชัดนะเอาไว้อ่าโอเคอืมโอเคอ่ะก็ผมว่าเท่านี้แหละของ Divergent Phantom เนอะก็อันนี้เป็นตัวอย่างเนอะในการมองใช่ไหมเอ่อจริงๆถามผมว่าผมมองยังไงแต่อันนี้ส่วนตัวนะส่วนตัวเลยจริงๆก็แล้วแต่คนชอบแบบบางคนก็มี ICT บางคนเทรดก็ใช้ RSI อะไรพวกนี้นะผมก็เคยเห็นนะก็ทำตังค์ได้ก็ไม่เป็นไรเลยอ่ะ สำหรับคลิปตัวของ Divergent Phantom ก็คงมีเท่านี้แหละที่เหลือเป็นตัวของตัวอย่างแล้วนะครับไว้เดี๋ยวเจอกันคลิปต่อไปในตัวของคลิปสุดท้ายของเดือนนี้แล้วก็จะเป็นตัวของ Double Bottom ใช่ไหม Double Bottom Double Top นะครับก็ไม่ยาวมากแล้วก็เดี๋ยวเราจะไปเจอที่เดือน5นะโอเคขอบคุณนะครับ